If you're refinancing or buying an investment property and the bank told you that your tax returns do not show enough income, then this episode is for you. Self-employed borrowers and property investors have increased dramatically over the last 2 years, making it difficult to fit into the traditional lending boxes. So SCI Mortgage is dedicated to those of you who do not fit into the traditional lending boxes and are looking to purchase a property or build your real estate portfolio. In this mini-series, we're going to cover what the DSCR loan is, or debt service coverage ratio loan, how it works, all the nuances, and if it's going to be a good fit for you. Welcome back to another episode of the SCI Mortgage channel. I'm Ryan Marks. I've been in lending for over 20 years, and I've worked for some of the biggest banks to ultimately transitioning over to the broker side in order to help clients just like myself who do not fit into the traditional lending boxes, because you may be taking advantage of legal write-offs on your tax returns and show little to no income. So let's get into what the DSCR loan is, or debt service coverage ratio loan. Simply put, the property's rental income is the qualifying criteria for whether you have a loan. It does not use traditional debt to income ratios. You are not using any tax returns, W-2s, pay stubs, or any other income documentation to qualify. The property's rent is the qualification. So simply put, if your rent debt coverage is what the amount of the mortgage payment is, including principal, interest, taxes, and insurance, at a 1-to-1 ratio, meaning the rent is $1,000 a month and the full payment is $1,000 a month, you essentially have a loan. So why this is so powerful for investors is because if you write off a lot on your tax returns, you're self-employed, you own multiple properties, or you want to scale your portfolio, you're going to be limited at some point on using conventional financing. The DSCR loan allows you to have, at this point, unlimited amount of properties financed. There's no cutoff, and more importantly, you could have no job, not own a current primary residence, and build your real estate portfolio from day one with zero investor experience using the rents to qualify. This loan comes in many shapes and forms, so it can be used as a best fit for your particular property. You can utilize a fixed mortgage, an adjustable rate mortgage, an interest-only mortgage product. They offer programs with as low as 15% down payment, which we will cover in more detail on the next episode. But essentially, you're looking to debt coverage the loan. So what that means is if the property has enough rent or fair market rent to cover what the mortgage payment is, that is essentially the main qualifying criteria to receive financing to utilize the DSCR loan product. The good news is not only can you use what the current lease agreement is if you're purchasing a property and it already has tenants in place, we will use 100% of that rent with no deductions. Or if the current property that you're looking to purchase has no tenants, we would simply order an appraisal to receive rent comparables, and we would use 100% of the average fair market rent in order to qualify the loan for financing up front. These types of loan products come with many different nuances, but very simply put, you're just looking to make sure that the loan debt coverage is in order to receive financing. And if you're refinancing your investment property in order to take cash out, you have the ability to use a DSCR loan not only on a first mortgage, but you can actually take out a cash out fixed second mortgage if you have one of those great low interest rates on your current rental property, without having to touch it and still access the cash available to you. And on the next episode, we're going to further break down all of the different loan products available for this DSCR loan. And if you'd like other tools and resources available, feel free to head over to scimortgage.com, where you can also get in touch with us. We'd welcome the opportunity to connect with you to help you structure your next purchase or refinance. And until then, remember to let your income work smarter, not harder. We'll see you on the next one.